Happy Tuesday, everyone. It is the 9th of February, 2021, 3:04 p.m. Eastern Standard Time. Wanted to get this done early this morning, but right now, as I'm talking, I'm looking at CNBC and Fox Business. There are a number of business leaders meeting with President Biden discussing the economy. Markets are pretty flat right now. The S&P 500 and the Dow and the NASDAQ. The Dow has clawed up a little bit. It's up 11.11. NASDAQ's up 0.14, and the S&P 500 is pretty flat. Going into our foreign currencies, taking a look at the dollar index. All right, so the dollar index last 3 days, it's had a pretty good push down lower. But if we look at where we're sitting and recall back a couple weeks ago, and last weekend a couple weeks ago, kind of been referencing the dollar index a number of times. We've got the Kijun Sen on the daily chart and the bottom of the cloud. So there's a strong support structure right in here. This does look like a bearish continuation move, though. This is a very typical bearish continuation pattern known as a bear flag. And bear flags are patterns that just indicate further downside pressure. This pattern is valid from Nichimoku perspective once the lagging span, the black average back here, once that is below these candlesticks, and then prices below the cloud, that would certainly indicate some further pressure to the downside. The dollar index today is actually down over 0.5%. It's down 0.54%. When we look at the oscillators, I mean, we see a pretty sharp cross down here in the composite index, and the RSI dropping down as well. But I do want to point out that there's some evidence here forming that we may get some hidden bullish divergence on the daily chart. Depending on how this guy closes, we could definitely see some hidden bullish divergence that occurs when, if we have a higher close here on the daily, if the close of today is higher than these swing lows over here, and if we look down here at the composite index, it's very slight. It's very, very slight, but we do have lower lows. So when price action has higher lows and then the composite index has lower lows, that is called hidden bullish divergence, which means prices resume up higher. How does this look on the weekly chart? So on the weekly chart, where did we find support here? Right up against this level. And actually, where did we find resistance? So if we look at last week, what happened and what level did we get close to that generated this drop? If you remember, we put this red horizontal line up here maybe 2 weeks ago or so, pointing to the Kijun Sen level on the weekly chart. You can see that as price got close to it, it didn't even get really right on top of it. But if you look at the candlestick, I mean, it got close to, well, rather when it just approached the Kijun Sen, it got slapped back down. And we ultimately did close above the Tenkan Sen. That's currently where we are in this current weekly candle. We're flirting with breaking down below it. The RSI and the composite index, actually these two right here, if the percent B crosses back down below, well, no. I would say if it does drop down, it wouldn't last very long. When the percent B crosses down below 0.2, you have a likely sustained move ahead if the RSI is above 40, which it's not. And this is actually pretty sensitive to that being a required level as far as the dollar index is concerned. So the dollar index is just a hair below 40, but this current weekly setup means that it may be limited to the downside. Let's look at the 3-week chart. The 3-week chart looks like it's still going to move up. We just had this crossover event on the on the composite index, the red line crossing above the fast average, the green, and then the percent B is about to cross above 0.2. That's a big deal. All right, that's a big deal. So it's not a surprise on the 3-week chart that we see this resistance as we got close to the Kijun-sen on the weekly chart, which is the Tenkan-sen on the 3-week chart. It's not a surprise at all that that's what occurred. The support structure here is, I mean, we've been trading against this for a while today, it seems. Actually, let me put a horizontal line there. I'll color this one like blue. Let's look at the hourly chart. Well, it feels like we've been trading up against it, but I mean, we've been flirting with the range here, ever since 6 a.m. Eastern, 3 and 4 a.m. Eastern Standard Time. We've been kind of flirting with this zone, and we ultimately have not turned back up. There is on the hourly chart, which is, hourly chart's a little too fast to measure any divergence, but on the hourly chart at least, there is some hidden bullish, regular bullish divergence that exists on the chart. We see lower lows with price action, but then we see higher lows with our oscillators. Now, if the percent B crosses back above one of these averages, that will more than likely trigger some pressure higher. But otherwise, I mean, on the daily chart, it looks like it wants to flirt with pushing down further south, but we have not had that occur yet. Trying to get rid of the arrow there. There we go. But it is holding there pretty strong. The euro definitely bouncing up higher, and it's getting close to the daily Kijun-sen and top of the cloud. Very natural resistance levels. This will give us a better idea of what's happening here. If we can look at the volume, especially the session volume, that's going to be a little bit more helpful. So the volume profile that you see here, that's showing up on the left here of the candlesticks, that is the session volume profile. So it's telling us, if you're unfamiliar with volume profile, what it is, it's a form of volume analysis. It's technically called volume at price analysis. And the volume profile tells us how much of something was traded at a particular price, whereas down below, it shows us how much of something was traded during a specific time. Up here, we see horizontal volume representing participation at a certain price level. And the red line that shows up is called the POC, VPOC, volume point of control, or just the point of control. And the point of control is where equilibrium is at. That is where the most buying and selling has occurred. And with volume profile and the point of control, the theory is that as you get farther away from it, the more likely you are to come back to it. That's not always the case, but that's what we're looking at. And at least on the Euros chart, the price levels that we're dealing with, I actually want to look at the visual of the volume that's been trading and relate it to those Ichimoku levels on the daily chart. So I got to get rid of the session volume. I really just want to look at all this here. So is there any major participation? Yeah, there's a high volume node around where we're currently trading at, and gets a little thinner as we get higher, but this is normal area to see some resistance. Whether we bust through or not, I have no idea. But it looks like the short-term correction move before we see a resumption of the drive south, looks like that's going to occur. Again, we'll have to watch it. Lots of stuff. I'm going to keep repeating this. A lot of things are at a major turning point. They're at a level where you could see things just reverse course very quickly. So just be, or actually continue. I mean, there are some continuation steps, but the oscillators are currently on the higher time frames. They're really not supporting that right now. They're really, the oscillators on the higher time frames, like 3-week chart, they're really indicating a reversal or a corrective move to still occur. So we'll keep an eye on that. But otherwise, y'all have a good rest of your Tuesday. Hope you all have had a great week so far. From all of us here at Exchange Rates UK TV, please have a good rest of your day. Don't forget to like and subscribe.